Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. So let's take a look again on the gold market. Here today we have to make a few adjustments to the scenario and trading plan that we discussed in a weekend. So the shape of the retracement on the lower time frame is changing. So in fact it started as we thought, but it started a bit, well, with the different patterns on the back, and that tells that we could get a few different targets to the upside that also theoretically might be achieved. But let's go step by step. So first of all, on the daily chart, we do not see really big shifts. Grabber is still valid. Context remains bearish since we have the bearish downside trend. Double repo has not been formed yet. So you can see that yesterday we haven't got close below the 3x3 moving average. And right now, maybe later in the session we will get it, but for now you can see that market stands above the moving average. So we do not have this pattern in place. Only grabber on the background that led us to consider taking the short positions. So that's what we have currently on the daily chart. On the 4-hour time frame chart, you could see that market now starts forming the pullback. And here is the big question. Actually, this is most uncertain picture here that we have. The riddle stands around two moments. First of all, whether it will be just the slope neckline of the hand and shoulders, which seems slightly too much, I suppose, especially if you will take a look at the performance previously. All these lows are actually stands really close to each other, which suggests that neckline might be and should be more horizontal. Or it means that here we will not get the hand shoulders pattern, because usually when you see this type of action, when you're suggesting that it should be hand and shoulders, but you see this type of action, it might be two moments. And first of all, it will be in the best case it will be another bearish pattern, but not the hand shoulders. For example, it might be garter steeple to sell when the grabber remained in place, but market will show deeper retracement before the downward action starts. Or in a worst situation, I mean worst for the bears, of course, that market could start forming some kind of a free drive pattern, or even will not form any bearish patterns. Because recall what we said, we will be watching as for direct patterns, hand and shoulders, double repos, as well as for possible failure scenarios of these patterns, because failure, double repo failure, hand shoulders failure is also really great indicator of the direction. And for now we have some uncertainty. It's obviously that here performance is not quite bearish, and now we need just to get some hints on what it will be, whether it will be still bearish pattern or market will keep going higher and this scenario will be erased. On hourly chart, recall what's going on. Initially, we thought that the pullback and ABC retracement should start from the XOP. This XOP from our initial ABC top pattern, if you remember. And in the weekend, I have drawn here in kind of the garter triple to sell, and we said it's one of the possible scenarios that might happen. But pullback has started a bit differently. So you could see that actually here on the bottom, we've got approximately the same pattern on the euro currency, the hand and shoulders. We have shoulder, head, right shoulder, and market starts upward bounce. And based on this pattern, we have few targets. First of all, based on the hand and shoulders, we have nearest target OP around 21.84, which is very close to idea that we have mentioned in the weekend. This OP creates resistance with the nearest standing level. And from the bearish point of view, that might be best scenario. So market forming just minor OP target, it will be kind of the also garter steeple to sell and turn down. More extended targets suggest reaching of the 618 level, because really big cluster of the target stands around 22 area. Take a look. This is XOP with the same ABCD pattern. This is 127 extension of potential butterfly here. So let's call it as a butterfly, although it's not quite. It's a butterfly only by the shape. So because butterflies usually forming on the top, butterfly cell, I mean. Here we have the butterfly cell, but I'm just using the shape of this pattern to show you extension. So 2193, also very close to the area, right? And take a look, this larger ABCD pattern, in the case if we will get inner to the butterfly, also has target very close to this level. So more extended upper direction suggests action to the 22. If by somehow market will just erase this recent drop, breaking this area to the upside, that will be really big bet on a possible failure of the bearish scenario. So in fact, I would mention this level as really vital for the current bearish context. Yes, we have a theoretical invalidation point above the stop because this is our grabber, but overall performance here in the breakout of this area, erasing of this downside action, moving above 22.10, it will be really bad, I mean for the bears. So some different action might start. And that's why actually, as a conclusion, we have two levels to watch for. First one is around 2182, 2184. This is first level where theoretically we could get downside action, starting with the downside action if bearish context is still working. And next one will be around 22, starting from the 2193 up to 2022 area. So right there, 2203. Let's use it also here. It's 1618 extension of the same with this butterfly pattern. So that's actually two area. Currently at this point, we have no hints on what particular level will prevail and what will happen. So here's as usual, you could follow different scenarios, different options for position taking if you'd like to go short. Either split your position, take it in parts, or wait for confirmations. For instance, one market hits first target, drop your time frame, see what's going on. If you get reversal pattern on the 5-minute chart, you could try to use it for taking the position. That really saves a lot of money and will let you to place very tight stop because you start trading actually on the 5-minute chart. If pattern fails, market keep going higher, you're also turning to the next attempt to go short and so on. A third way how you could act is actually wait when the market finally will reach the target, and when it starts dropping, trying to take position on a retracement. That has advantages and disadvantages. Advantages is that you will not take the position if market will just keep going higher, so you will have no loss. Disadvantages is that you probably will get worse entry point in comparison if you're trying to take position at the levels. So in every scenario, it's some pluses and minuses. So whether to combine them or just you follow the one of them, this you will have to decide by yourself. But in current situation, everything stands as we have just described. And at this point, it is too early to consider new longs position on a daily chart. So because we have the bearish context and it's still valid, that's why we're not talking about the new longs. Concerning the bearish positions, we have discussed everything right there.